Good afternoon, everyone, and welcome to our webinar here. Thank you very much for joining us. My name is Tanner Coles, and I'm a Senior Mortgage Analyst with JR Group Mortgages, and we're very proud to be your esteemed alumni partners. Today, we're going to be discussing the importance of mortgage renewals and how we can make the most of your mortgage renewal. This is the perfect opportunity to reassess your mortgage and your mortgage lender. So with that being said, let's get started. And at the end of the slides, if we have any time, I can answer any questions you may have. So in greater detail, we're going to be discussing a few topics. So the first one is going to be renewal preparation, important life changes to consider, mortgage considerations, and we're also going to be providing some insider renewal tips. So here is a quick fact that we have for you, and it's actually a shocking statistic. And that is that just over half of Canadians last year took the time to negotiate their mortgage upon renewal. So that means that 44% of us simply signed the renewal agreement that was mailed to us by our lender, or accepted the first offer that was presented to us at a branch level. Now, the renewal process is just as important as going through the mortgage application process when you're purchasing a home. So it's important for us to start changing the way that we think about our mortgage renewals and consider the importance, again, just as when you obtain your first mortgage. So that is doing all the homework, understanding the mortgage, any costs involved, pros and cons, features, and, of course, mortgage penalty calculations. Again, during this time, it's the perfect time to review all of your options, okay, especially going forward. What are you looking to do in the future? What are your plans? What are your goals? Some of the most important questions to ask yourself or to consider are significant life changes that may have occurred in the past couple of years or even very recently. As well, maybe some of these aspects might be expected in the near future. Are you recently married? Maybe you're recently separated or divorced. Or we have new additions to the family, new children coming into the world. Another thing to consider is if we plan on selling in the next 5 years. Or are we planning on remaining in our home for the next 10, 15, 20 years? As well, are you thinking of purchasing a rental property in the future or a vacation home? And if you are, do you plan on using the equity in your home as a down payment for your next purchase? The two most considered factors during the mortgage renewal period are home renovations and debt consolidation. These are two factors that need to seriously be considered during the renewal process. If you are considering home renovations or debt consolidation in the middle of your mortgage term, oftentimes legal fees occur. So during the renewal process is a great time to look into these options. Okay. Are you planning on retiring soon? As well, do you plan on paying off your mortgage in the next few years or even prior to retirement? So all of these aspects or life changes and events are questions that we need to ask ourselves and think about prior to entering into a new mortgage agreement. Now, as we already explained, most of us simply sign the renewal document that's given to us by our lender or our banker. Now, we don't encourage this, and the way to avoid feeling pressured or simply signing the first agreement that you see is to be prepared, okay? Renewal preparation is key. We encourage you to start thinking and start planning about your mortgage renewal at least 4 to 6 months prior to your maturity date. Too many of us start thinking about our mortgage renewals 2 weeks or 1 week before our maturity date, and unfortunately that puts us into a pressure situation and forces us to enter into an agreement which may not be the best for our specific financial needs or goals. Okay, and of course, during your mortgage renewal, consider using a licensed mortgage professional. A licensed professional has the ability to shop the entire mortgage industry for you. And of course, their expertise and knowledge of the mortgages can help you save time and money. Okay, so it's important to start shopping your mortgage early, which allows you more time to consider your situation and consider the mortgage needs moving forward. As well, it gives you 120 days to hold a rate while you have a mortgage professional shopping for your renewal. So we've included a little insider tip that not a lot of Canadians know, but we felt it was very important to make aware of. And that is that the majority of mortgage lenders, not all, but the majority, will automatically renew your mortgage into a 6-month open term if you do not sign the renewal agreement in time. So, for instance, if you were on vacation or you forgot about your mortgage renewal and it's come up really quickly and you're panicked about having to sign that maturity next Monday, just be aware that there's a good chance that you still have time to contact a mortgage professional, do your due diligence, and have your existing mortgage roll into an open if necessary. Okay, so this just gives you a little bit more time to think about what you're going to be needing going forward rather than succumbing to the pressure or banker advice to sign right away prior to your maturity date. Now, oftentimes during a mortgage renewal period, there are competitive solutions elsewhere in the mortgage industry. So more competitive solutions being offered by alternative lenders. The reason for this is that your existing lender naturally is not in a competitive position. They have your mortgage. Maybe they have your checking and savings account, perhaps a credit card or even a line of credit. Okay, so in their minds, you are a satisfied customer, and there's a good potential that you're not going to necessarily shop your mortgage elsewhere. However, oftentimes a mortgage professional can shop the mortgage market for you and have the lenders competing for your business. So you may have better opportunities elsewhere. Now, if this is the case, there are a few items that need to be considered before switching lenders. The first one is going to be required documentation. Most importantly, we're going to be looking at income documentation as well as any assets or major liabilities. So it's important to have the time to ask your professional what's going to be required and how long it will take. As well, it's important to know what mortgage products are being offered elsewhere. Are there any restrictions? Are there any prepayment privileges? How do you calculate the penalties? And most importantly, if you are to switch lenders to a more competitive solution, what are the setup costs, if any? Now, similar to purchasing a home or refinancing your mortgage, the same products are available. So there are fixed rate mortgages available, variable rate mortgages available, as well as home equity lines of credit. There's also opportunities to mix and match these solutions. You can have a portion of your mortgage in a fixed rate and a portion in a variable rate, and you can also have a portion in a home equity line of credit as well. Now, these are different tactics and strategies used for risk management as well as potential cost savings. But these strategies will need to be spoken in greater detail with your mortgage professional because the way these are set up will need to be tailored directly to your particular needs. That is everything as far as your mortgage renewal goes at this time. If you have any questions at all right now, please type them in the chat box and I will be able to address them for all of our attendees on the phone right now. Okay, so I don't see any questions coming in right now. Oh, here's one. Okay, so we have a couple of questions here, really great questions. The first one is to be a little bit more specific on what would be required as far as documentation during a mortgage renewal. So the most important documentation would be income documentation. Now, the documents will depend on what sort of job you have, if you are salaried or if you are self-employed or even a casual worker. So to give you an example, a salaried employee would need to provide a current employment letter and a most recent pay stub. If you're self-employed or commission sales or even casual, we'll ask for similar documents, an employment letter, a pay stub, as well as notice of assessment. There's a couple of other documents which are really easy as well. We look for a current mortgage statement and a property tax notice. 9 out of 10 renewals only require these documents. So essentially it's about 4 documents. Now we have another question as well, and that is pertaining to a discharge fee. And the question is, are the discharge fees charged up front? So yes, lenders do charge a discharge fee for leaving their institution. The general cost can be $75 to $300. It just depends on the lender. However, in most cases, if you are switching your mortgage, the new lender will cover the cost for you, including the discharge fee. Another great question we have is, what should we put together before we call you for a mortgage renewal? So a really important place to start would be either a phone call, of course, to our office, but an application. We have plenty of application forms available, and it's a very simple form. It takes 10 to 15 minutes to complete, and that information will allow us to review your information and know exactly what we would need from you going forward. So similar to what we discussed just a second ago here, it's important to have some income documents together. So an employment letter, a pay stub, your most recent mortgage statement, and your most recent property tax notice. There might be some additional items required, but that's going to depend on the particular application. So we have another question as well, asking for more information pertaining to life changes and how to consider them. And we did explain some examples of, life changes and what to think about. How to address them is really going to depend on the individual application and the individual situation. So, we mentioned things like marriage or divorce or perhaps bringing a new child into the world. Now, everybody's financial needs are going to be different. So that's something that we would speak to you about one-on-one in greater detail. Another question is, can you refinance a fixed-rate mortgage before the maturity date without paying a penalty? And if there is a penalty, does it make sense? In some cases, it makes sense to renew your mortgage early. If you do so with an alternative lender, a penalty will be charged by your existing lender. Now, this only makes sense if the savings in interest rate outweighs the penalty costs, okay? Now, typically it makes the most sense when you're within 12 months from your maturity date. This is when the mortgage penalty is at the least amount. Now, it's going to depend on the current interest rate and how the lender calculates the penalty. So again, that is something that we would look at on a case-to-case basis. We would have to run the scenario for you and again, see if mathematically it makes sense to renew early or perhaps hold the rate for the 4 months, keep shopping the market, and wait until your maturity date. We have another question. Will the lenders require an appraisal? And if so, is default insurance required by new lenders? So there's a couple of questions here. It depends. So in some cases, an appraisal would be required, and in some cases, an appraisal would not be required. It depends on the loan to value, and it also depends on the lender themselves. Default insurance, another way of relating to default insurance would be CMHC insurance. This would not be required again. The only time CMHC or default insurance is required is if your mortgage is high ratio. Okay, so that means a loan to value of 80% or greater. If you are renewing or switching your mortgage and the loan to value is still a high ratio or greater than 80%, the default insurance that you've already paid for is already in place and remains, so it would be ported with your new product. Now, we just had a listener miss the part about home renovations pertaining to the mortgage renewal. Home renovation is something to think about during the renewal period because this is a time when you may be able to obtain a line of credit or even take out some equity from your home to pay for your home renovations. We say that this is an important aspect to consider during the renewal period, okay, because your mortgage is up for renegotiation. So this is the time to tailor your new mortgage or take out equity where you can avoid as many costs as possible. If you renew your mortgage and you decide a couple of years later that you would like to pull some equity from your home to pay for your renovation, you're going to be breaking the mortgage penalty, and in doing so, the mortgage contract. And in doing so, you're going to pay a mortgage penalty and even legal costs as well. This is a really great question. What sort of qualities should you look for in a licensed mortgage professional? So when you're calling around or looking for a mortgage professional, you want to look for an experienced individual or an experienced mortgage team. I would say this is the number one quality when you're looking for someone to handle your mortgage. Similar to when you're looking for a financial advisor, right? You're looking for an experienced individual or an experienced team that is well versed in the financial industry and knows all of the ins and outs and is going to be working hard for you to earn you as much money as possible. We are providing the same service but on the opposite end. We are more of the debt managers. We're managing your mortgage, help navigating you to save as much money as possible. So I would look for experience. I would look for a company that has a great reputation and, of course, prompt responses as well. So are there differences between mortgage brokers, and what should you consider, again, when choosing a mortgage broker? So, yes, there are multiple differences between mortgage brokers. So, essentially, a mortgage broker shops the mortgage market for you to find the best solution, whether you're purchasing a home, refinancing your home, or renewing your mortgage. However, each mortgage professional and each mortgage company operates in a different manner. Some may be tailored to your liking more than others. So again, you should be looking out for an individual or a company that has lots of years in the industry, lots of experience, a great reputation, access to as many lenders as possible. Not all mortgage brokers have access to as many lenders as other brokerages do. Okay, and most importantly, look for a mortgage team like Fair Group Mortgages that actually manages your mortgage once your mortgage is placed. The majority of brokerages out there do not take on a management approach. Similar to dealing with the banks directly, they will help you facilitate your mortgage, and that's it. They'll contact you when your mortgage is up for renewal. But it's important to have a team behind you that's there to answer any questions you have, contact you when there's opportunities to save you money, and help restructure throughout the term. So again, that is a question to ask your mortgage broker or your mortgage team. Will you manage my mortgage throughout its term? Okay, so it looks like that is all of the questions we have right now. If you have any further questions whatsoever, please email them to admin@dreergroup.ca. You can always give us a call as well at the office, and the number is 604-536-3802. If you'd like a copy of the presentation, or if you would like an application, again, just email admin@dreergroup.ca. Again, we are very happy to provide you with these mortgage benefits as part of your alumni association. Just as a reminder, we guarantee you the best mortgage rate, up to 1% off bank posted rates. We offer complimentary appraisals and a legal fee credit. Most importantly, a portion of every mortgage goes back to helping future graduates of your Alumni Services Program. Thank you very much for listening, everyone, and we will be talking with you shortly.